Hey guys, hope you all have a splendid morning. Today we are going to talk about housing once again. I came across a really wild report coming directly from Bloomberg suggesting that Zillow, the company that is heavily favored by Wall Street, has made a huge bet for the company's future. This bet aims to really take out human competitors out of the equation in many ways, in which I will explain. Wall Street members, many who you will not be shocked to hear, are investing big time into Zillow following this move, and they are aiming to pretty much outbid everyone and monopolize the housing market as we know it. You might think I am exaggerating a bit to sound melodramatic, but give me 5 minutes and let me put some new data figures along with some statements from the CEO of Zillow himself, and then you can tell me if it's me being a little extra for fun or if it's me literally screaming that housing as we have known it is about to be flipped upside down into something you will not even recognize. With these changes comes a whole baggage of outcomes, of unprecedented consequences that I do not think we are formally equipped to handle. I want to thank Patrick Clark and Noah Buhayar's great journalism for inspiring me to make this video. Much of the work here is built upon from their work. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. Let's get started. In this channel, we have talked in great length about the housing market and its relationship to some of the same Wall Street members that are behind the meme stock scheme. In one particular video, we discussed how Zillow, the giant known for having all the flashy real estate listings, have slowly and subtly creeped on the housing market, and served as a perfect entry point for Wall Street to start buying out pretty much all the valuable housing. A big reason why Wall Street is so interested in housing all of a sudden is that they have a ton of cash on hand, and it's being eaten away by inflation. They need an asset to park it, and what better place than housing? The Fed, led by notorious clown Jerome Powell, have literally orchestrated another housing bubble, but this time it will be much worse than before. In fact, this time the aim of it is simply to not allow any ownership of housing to people. A couple of weeks ago, we went over how Wall Street is buying all the middle-class housing in growing cities, forcing people to have to rent while also bribing politicians to strain new housing so that they can artificially raise the price while artificially keeping supply low. Well, things have gotten more dire. CEO of Zillow Rich Barton has staked his company on a future bet that relies solely on its software's ability to shorten the amount of time it takes to sell a house. You might think this is beneficial, as the whole process of buying a house can be long and frustrating in many cases. Well, the problem is that this solution does not really benefit people buying and selling houses in general. It actually helps Wall Street get their hands even deeper on the $2 trillion housing market in America. This past August, Zillow raised $450 million from a bond backed by homes it had not yet sold. The offering just happened to be led by Credit Suisse, which to anyone who has followed the events of GameStop or AMC should know very well by now. This offering that Credit Suisse made was modeled to be like the loan facilities that car dealerships use to finance floor models, and investors on Wall Street have been eating up the idea. In fact, the demand for the offering was so big that the Zillow is now in the process of selling another $700 million in bonds. Let's wind the clocks back a little bit. Zillow and other companies alike have decided that they risked falling behind in competition and on new entrants into the real estate business if they did not start buying and selling as well. As such, Zillow and its competitors have been working diligently to solve the timing problem for their customers, especially those that seek to sell a property in order to buy one. For the most part, until a customer can sell a property, it can be really hard for them to pay up for a new one. Another problem that can happen is that if the seller finds a buyer too quickly, they can find it challenging to find a new place to live. A solution for this was found through a startup called Open Door. Open Door would allow people to request an offer on their house, and an algorithm would put a price on it. If the property owner accepted the offer, which usually had a small discount compared to what they would have gotten on the open market, they would instead be allowed to schedule the closing to line up with their purchase of a new property. Zillow, along many others, have been building their own algorithms using the same format where through their algorithms, users have the option to sell their property to Zillow after an instant estimate is given on the home's price. To give you a bit more detail into this new software, the model takes into account short-term changes that can happen in the home given the average 3 to 6 month average timeframe that it takes to flip a house. It is actually networked with home renovation contractors and debt facilities for funding. And this is where this tale starts getting really dark. The 4 largest buyers that have used this system acquired around 15,000 homes in the second quarter of 2021, which accounted for a whole 1% of all purchases made nationwide. These volumes, as you might imagine after seeing how popular the bond offerings were, are about to surge like nothing ever seen before. By year 2024, Zillow expects to acquire homes at a pace of 5,000 per month. A competitor named OfferPad Solutions is estimated to buy 70,000 homes per year based on future opportunity. Opendoor, which we just mentioned, said they currently have a mission statement to acquire 4% of all home sales in 100 different markets. These three companies alone will be acquiring about $100 billion worth of homes per year very soon. Private equity firms and asset managers are buying houses to convert them all into rentals. Lenders are getting very comfortable with companies like Zillow, which will open up plenty of opportunity to allow them to acquire more credit to increase purchases. Zillow has recently said they carry $500 million facilities with Credit Suisse, Goldman Sachs and Citigroup. These three companies are also important players in the whole squeeze ordeal with meme stocks, and they are seeking to destroy housing as well for you. Americans have always seen ownership of single-family housing as a family affair, but that is changing so quick that the government isn't even aware of this. In fact, I don't see a lot of people talking about this issue. Wall Street loves this new software program that allows them to pretty much close out immediately on housing deals, because it gives them full advantage to target the most valuable houses being listed, and they get to exclude other listings by people and impose themselves via this program. Zillow and the other companies are looking to purchase houses, and they will calibrate the algorithm to make offers that are above asking prices if it means getting the deals. In fact, this is one of the risks that Zillow has. If the housing market slows down, the company will take a loss on the houses they bought, as they will struggle to sell them, which is needed in order to maintain this business model. Yes, the idea is that in the long term they raise enough cash and profits to buy and rent properties infinitely, but since for now they are using investor money and bonds, they do have to engage on buying and selling a certain amount in order to pay back investors. Things can quickly go out of spiral if they engage in this type of business, which by all accounts they intend to. This is because they would be forced to overexpose themselves, which could result in more than $100 billion in debt in a given moment, and this isn't even a worst-case scenario. Wall Street is using the same playbook that they used to short meme stocks, overexposing their positions because they know that when the hits come, Congress will slap them on the wrist, fine them a couple $1 million that they will write off on taxes, and then do it again but more aggressively. There is enough reason and evidence to believe that they will not be only focusing on middle-class family housing. Certain talks and data suggest Wall Street will be having Zillow use this algorithm to start locking in on properties for low-income classes as well. They are declaring a full-out war on the American public, and there is really no way out of this. I tell you this because right now, Zillow and similar companies are not even remotely close to where they will be in 5 to 10 years. Already we are starting to see that there is a growing and noticeable pushback by people all over sectors in America. Real estate agents are taking to social media accusing companies like Zillow of manipulating prices. If you think this problem only affects people buying houses, think again. About 1.6 million people were employed in the real estate sector in the United States as of 2016. What will happen to our ever-crumbling economy when their jobs are made redundant? I hope you are not betting on the government coming to save the day. We already talked about how low housing has affected birth rates, and the economic consequences that not having a big generation to substitute the previous will have. To conclude and summarize all key points, Zillow has raised $450 million in bonds backed by homes they have bought but not yet sold. The offerings are being led by some of the same institutions that are shorting meme stocks or have in the past, such as Credit Suisse. Zillow, like many other companies, are heavily favored companies by Wall Street who intend on buying out all middle-class housing. In order for Wall Street to get a bigger share of the $2 trillion housing market, they have pressured Zillow along other companies into making and using a software that solves the timing problem that they face when trying to get people to sell their houses faster. This software allows the homeowner to request an offer on their house, and the algorithm takes many variables into account before giving them an instant offer. The offers are usually slightly smaller than what they would get on an open market, but the trade-off is that they are allowed to schedule the closing the line up with their new purchase they make. This business model will allow Zillow and similar competitors to further entrench users into using their software and grow their cash flows, further starving the natural model that has always existed where home purchasing has always been kept a mom and pop affair. This model is working really well, and will have Zillow and similar competitors buying up tons of houses in the future. As such, Wall Street is investing heavily into these companies now. The only constraint facing these companies has been credit, because they will need lots of it with plans of buying out pretty much the entire housing market. However, with the favor of companies like Goldman Sachs, Citigroup and Credit Suisse, they are being offered really low interest rates, going as low as 3%. This will allow them to start snatching up a ton of houses in the moment. I believe they are doing so because they also fear regulators will soon start looking at what's happening here and they want to get as many houses as possible before they start getting restricted. However, I am sure they will also be bribing up politicians through political donations so that they delay themselves into not looking into it for a while. By buying up all these houses, the amount of exposure Zillow and therefore Wall Street will have is really dangerous. The business model is literally identical to how Wall Street has operated on the stock market, with GameStop and AMC in particular. We have not seen these companies be exposed to adverse economic cycles in the housing market of this magnitude, and their business model is built in such a way that they need to consistently have willing buyers at all moments. If a really bad economic cycle comes and Zillow and similar companies don't find too many buyers, this whole thing will fall down crumbling, and we will experience entire housing market crashes since they will own the great majority of housing, further affecting everyday living Americans. Generational wealth, millions of jobs, birth rates, low morale, less dating, higher rates of depression and suicide, increased use of drugs and alcohol and many other problems in society are closely related to home ownership in one way or another. The crisis we are starting to experience will only enhance these other problems. Do not give up hope. Try to create awareness of these problems by talking about it with others. I hope I was able to create some awareness into this problem, and maybe inspire some wrinkles. Let me know what you think in the comments below, and I will see you guys later today for another pretty wild video on the afternoon. Thank you all so much for watching this video to the end if you are still here. If you want to support the channel, I have left links in the description for my Patreon if you would like to pledge a monthly support of any amount you want. I also left a PayPal and Cash App link if you want to make a one-time donation. Again, thank you so much for watching, and I hope to see you later today. Until then, to the moon.